أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله الصلاة والسلام على رسول الله السلام عليكم ورحمة الله وبركاته. Welcome to our last class on chapter 16. Inshallah, we'll finish today. We have a little bit left, so we probably don't need the entire class period. We discussed the auditing of cash and cash equivalents, and we have some extended procedure, some extra procedure to perform when it comes to cash account, because the cash is the most liquid asset, and we want to make sure that what is reported in the cash account is accurate and we are comfortable with the balances. So what we have discussed in our previous class, that we get a copy of the bank reconciliation, which is prepared by the client. We get a standard bank confirmation, which is a letter that we, the auditors, send to the banks where the client has accounts, and we receive a confirmation from the bank stating what the balance was on the last day of the year. And then we also get a cut-off bank statement, which is the bank statement for the first 7 to 10 days of the new year. All right, so far so good. You're following these three documents we looked at in our last class, if you remember, right? Are you with me? Okay, now what we have to do first to do the test of bank reconciliation, and we discussed this in our last class, but we'll talk about it again, because if we feel that we are not comfortable with the cash balance, or we feel that the controls are weak, or we feel that there may be fraud, we do some extra work. We are careful with the details that we check. So verify the mathematical accuracy and agree the balance per the books to the general ledger. So we come to the bank reconciliation, and there are some the mathematical calculation done by the client, such as adding these deposits, adding these checks, adding and subtracting these numbers. So we do the mathematical accuracy, we check the mathematical accuracy, and we want to make sure that this number, this adjusted book balance, matches the general ledger. Okay, so this number 270,000 is the same as the general ledger. Okay, are you following? That 270,000 should be in the general ledger. Is that clear? Then we agree the bank balance on the reconciliation with the balance shown in the standard bank confirmation. So this number right here, cash balance as per bank statement December 31st, this number 300,000 is coming from the bank statement that the client has used, and you also have a copy of that. You can look at that. This number is coming from that bank statement at the end of the year. When we write the letter to the bank asking for a confirmation, their bank confirmation should also tell us that that was the number in their bank account. So if we look at the bank confirmation letter, you see here the 300,000, right? This 300,000 is the same as what they had in the bank statement, so we are good to go. If this is different, then there is something wrong. So far so good. You're following? So we have the 300,000 and we have the 300,000 there, so everything is good. Then we go to tracing the deposits in transit on the bank reconciliation to the cut-off bank statement. And again, we have these deposits in transits that we have in the bank reconciliation. These deposits were made at the end of the year. They should clear the bank at the beginning of the year. And in real life, there could be many deposits listed here, and they may have multiple bank reconciliations, multiple bank accounts. So we have to go and match every single one of these with the cut-off bank statement. So you see here, cut-off bank statement has these three deposits, 11,000, 6,000, and 3,000, and this is matching exactly. So this is a very good situation. It is possible that they are depositing amounts that are listed in the deposit in transit that are clear in the bank but not for the same amount. That means either they made a mistake in recording or cash is missing. And this is something that could get really hectic, right? When you are doing a real bank reconciliation or testing the accuracy of a real bank reconciliation. This is one of the things that I had a lot of difficulty with because the details are not accurate many times, and to find where the error is, it makes, it creates a lot of headache for the accountant. And you, when you work, you will know this. But again, you will learn this, so don't be frustrated. You will learn this. It takes time. You have to do the work for a few years before you can be comfortable, right, with this. All right, so what did we do? Okay, here, so trace the deposits in transit in the bank reconciliation to the cutoff bank statement. So far so good. You understand the third point? Then we go to the next stage, which is compare the outstanding checks on the bank reconciliation. Okay, so we come and we again have these checks that are outstanding in the bank reconciliation, and these four of these five checks cleared the cutoff bank statement. This one check, 1081, did not clear the bank, so we will further investigate it to see. Remember, we discussed this in our last class as well. This check, all of these checks that cleared the bank, they were written by your client. They went to the supplier deposited those checks in their banks, and they received the payment. The checks came back to the client's bank, and when the client receives the bank statement, they also receive those canceled checks, those checks that they used. Are you following? So you will find at the client's location all these checks, 1077, 78, 79, and 82. If the check did not clear the bank, you will not find it with the bank statement because the supplier still is holding that check. Are you following? Are you following? You get the idea of the canceled check. So you have a canceled check, right? What is the confusion, Sharat? Check number 1077 was written by your client for $9,000. It went to the supplier. The supplier took that check and deposited it into the bank. The bank gave the supplier 9,000, and this check now, this used check now is returned to your client with the bank statement. Do you follow? Check number 1088, yes, it's with the supplier. It's not still clearing the bank. Okay, once it clears the bank, your client will get that check back. Is that clear? The check that your client received back is the canceled check. Okay, now what we have to do with the canceled check, we have to check in the canceled check the proper payee, the amount, and the endorsement. So you have the canceled check, check number 1077. If your client wrote that check, which your client did, who is the payee? Who's the payee of that check? The supplier. Very good. So the amount would be 9,000. That 9,000 amount should also be in the cash disbursement journal. So when I say cash disbursement journal, is that something foreign to you? Is that something that you don't know what it is? Or do you know what I mean when I say cash disbursement journal? Is it known or unknown? Cash disbursement journal. What is a cash disbursement journal? Anyone? List of all cash payments, right? I showed one to you in our last class. You can go back to the previous lecture. The 9,000 amount should also be the same in the cash disbursement journal. So for that check, you should find 9,000 recorded in the cash disbursement journal. And then we also check the endorsement. Now, if check number 1077 was written to the supplier by your client, where should be the endorsement? In the front of the check or the back of the check? Okay, are you there? Okay, the back of the check, right? The endorsement. Whose should be the endorsement? Who should have done the endorsement? Supplier, very good. We should check and make sure that the supplier who the amount was paid to is the one who did the endorsement. The next thing we do is agree any charges included on the bank statement to the bank reconciliation. So we come to the bank reconciliation right here, and we see the service charge, $100. This should be the same in the bank statement. $100 should be the same in the bank statement. Very simple to check. The bank statement should have that 100. The last thing here is agree the adjusted book balance to the cash account lead schedule. Now, the adjusted cash balance, what is the adjusted cash balance here? How much is the adjusted cash balance on the bank reconciliation? 270,000. Very good. This number should be the same in the lead schedule. What is a lead schedule? This is what it looks like. From your client, you're going to get a lead schedule that shows the beginning balance, all the money that was deposited into the bank account, all the money that was taken out from the bank account, and the ending balance for every single bank that the client has, every single account that the client has. So this last one, 270,000, should match the 270,000 in the bank reconciliation. Remember, these are overlapping documents, right? They should all match, and they do all match most of the time. But in case there is an error, then that needs to be further investigated to see what is going on. Why is this wrong, right? Is this an error, or is there a fraud in there, something fishy in there? So we want to make sure, because when people are making things up, sometimes they forget to fix it in one place, and that gives you the clue that maybe there is something wrong. Is that clear? Okay, now if we have fraud, if we suspect fraud, then we extend the bank reconciliation procedure. We search for items hidden in deposit in transit and outstanding by employees. Now, deposit in transit should clear the bank within 3 days. deposit in transit should not be in the deposit in transit beyond 3-4 days. If you have a deposit in transit for sitting in the bank reconciliation for a month, that means that money was not deposited into the bank, and either the person who's supposed to deposit it stole it or misplaced it, or it was an error. The money that was deposited into the bank, within 3 days the bank statement should show that money, and the deposit in transit should be removed. One time, one of my clients had deposits in transit that were more than a month old, and I told the client that, this money is not in the bank. It was shown as deposit, but it was not deposited into the bank. The client became upset with me. He said, my brother deposits some money into the bank account and I trust him, etc., etc. I said, it's nothing. I'm not saying you should not trust him. All I'm asking is, where is that money? Because it's not in the bank. Do you follow what I'm saying? So deposit in transit should not sit there for more than 3-4 days. It should clear the bank. Is that clear? Also, checks should not be there for a long period of time. So you need to investigate. If you find checks that are there for months, something is wrong. Why is the supplier not depositing that check? Is this a real check? What is wrong? If somebody pays you money, you want to take that money. If supplier is not taking that money, what is wrong? Do you follow? Right? Proof of cash is verify and match the receipts and disbursements in book and bank, looking into the money coming in and money going out from the cash receipts journal and the cash disbursement journal, and comparing that with the bank. We do that anyway, but when we are doing extended procedures, we want to take a larger sample. We want to be more careful. We want to see that everything that is in the cash receipts and cash disbursement journals actually went in and out of the bank account. Okay? The last thing we have is test for kiting, and this is a particular type of fraud that is done. I have never seen it myself in real life, but this is something that is possible, and I'm going to explain this to you. Requires a little bit of attention, so try to understand what this thing is. Kiting is a particular type of procedure. It is described in here. It is described in words in here, and you can read this. I'm going to explain this to you with a simpler diagram. So the kiting is described here, and I'm going to describe this to you here with this slide. I'm going to give you the description here verbally. Let's say the client opens 2 bank accounts, Bank A and Bank B, right? Has 2 bank accounts. In the first bank, they deposit 500, and the second bank, they deposit nothing. So on December 30th, what is the total amount of money the client has? The client deposited 500 in one and 0 in the other one. How much is the total amount of money the client has? 500, right? Okay. On December 31st, the client writes a check from the checkbook of Bank A in the amount of 10,000. Does the client have $10,000 in check in Bank A? Does the client have $10,000 in Bank A? No. They write a check. You can write a check, right? The check can be written for any amount. Whether it will be honored at the bank or not, that's a different story. So they take that check and they deposit that check in Bank B. You see that? This check is deposited into Bank B for 10,000 on December 31st. Are you following? The bank takes that check. They will have to now go to Bank B to collect the money, right? Are you with me? But before they do, they add that amount to the balance. So they will add 10,000 to the balance of Bank B and show the balance of 10,000. The client cannot withdraw the 10,000 until Bank B gets the money from Bank A. But the bank statement shows 10,000. Are you following? In 3 days, once once bank B does not get the money from bank A, the balance will return to 0. But the bank statement shows 10,000 on December 31st. And if you write a letter confirming the balance, that confirmation letter will also show 10,000. Are you following? Are you with me? So they do the same thing with bank A, write a check from bank B for 10,000, deposit into bank A, balance shows 10,500. In 3 days, both of the balances will return to 500 and 0, but the bank statement shows 10,500 and 10,000. The balance sheet shows 20,500. And when you come to audit, you will not find anything other than 20,500 because the bank statement shows that, the bank confirmation letter will show that. Do you follow? This is called kiting. If they have 10 different bank accounts, they can multiply and show millions where they don't have anything. Is that clear? There is the bank charges a fee for insufficient checks, let's say $50. They will pay that fee, no problem. In January, they will pay all those banks for writing insufficient checks, but they will show high bank balance at the end of December. Question here from Sharat is, so even if this happens in real life, we are not going to notice. If you perform the standard bank procedures, you will not notice, but where will you notice this? Let me see who's smart. From what I have taught you, if you perform everything that I taught you, you will catch this, but where will you catch it? Where will this problem show up? No, not in deposit in transit. Remember, the balance will return to 0 and 500 when? When will the balance return to 0 and 500? On what date? Again, the balance will return to 0 and 500, right? On what date will it happen? Cut off. You see, you look at the cut-off bank statement, you find that. Are you following? But if they have multiple banks, they could continue to write checks to cover the amount from one bank to the other, doing interbank transfers, showing the same amount in different banks within a difference of 1 day, 2 day. So you have to really look at all bank statement for multiple days at the same time to see all these interbank transfers, what is happening with them. So you have to do it on a spreadsheet and you will be able to catch it. But again, this is not something, I have not experienced this myself. You may never experience this, inshallah, in your career, but this is something that is there. So keep this in mind, okay? This is deliberate fraud. This is your client, if they want to do fraud by intention, this is not an error, they want to do this fraud, then you can catch it. It's possible to catch it, but it's not something that you will find commonly. Is that clear? Are you beginning to feel like a private investigator? you have to, I mean, it requires, and because of this, you know, your intellect will improve. If you work as an accountant, as an auditor, your intellect will continue to improve because you will see all of these things. And you know, when you find something, which you will do to some extent during the simulation, when you will find something, you will feel the joy, right, of 007. Okay, last topic we have is petty cash, which is the amount of cash kept at the location at the business. It's usually immaterial, 2 $200 to $400, $500 maybe for buying small supplies and things like that. It's usually immaterial. Test of details are usually not performed on those, but there is potential for theft, so it can be stolen easily. So you want to see what the controls are, meaning where is it kept, is it under lock and key, who's responsible, who is supposed to spend money from that, how do they replenish that fund, etc., etc. But it's a small amount, not a big deal, but nonetheless, you can ask a few questions to make sure that the petty cash is handled properly. All right, so this brings us to the end of chapter 16. Okay, chapter 16 and chapter 11 lectures are recorded. You should listen to both. It will help you with the simulation, inshallah, and I will give you more details on the simulation next week, inshallah. All right, we'll end chapter 16. We are not going to begin chapter 13. We'll do that next week. So we have 2 chapters left, chapter 13 and chapter 14. We'll finish, inshallah. We only have 3 weeks left. So work hard a little bit during these 3 weeks and during the exams, and you can enjoy the summer. If you're graduating, then inshallah, you will move on to the next stage of your life. Who's graduating this semester? Sharat is graduating. Who else is graduating this semester? Jasim, Hamza, Ali. Who else? Who's graduating next semester? Mu'tasim, this semester. Inshallah, inshallah. Say inshallah. Inshallah. Very good. All right. So if there are no questions for me, have a good weekend, inshallah. And I will see you on Sunday. All right. Assalamu alaikum wa rahmatullahi wa barakatuh.